Hello, today is Friday. It is 4:11 p.m. on Friday, January 28th, 2022. So, we're basically seeing 4% swings in a day. Not fun. Ignore the news, as I always tell you, but for some reason, most clients continue to watch it. Understand the economy is not the market. Now, the reality is when we're in a downtrend, which we had a nice Friday, nice rebound, which I'm hoping this could very well be close to a bottom, and I'll show you why. But I want to explain the strategy. So basically what I'm trying to do is beat the benchmark, which is the S&P 500. And since we've been trading our new strategy, which has been since September 15th, 2021, we have outpaced by 5.52% and alleviated a lot of the pain on the downside, okay? So the reality is this, and I want to be upfront, honest, so you understand the strategy. The S&P 500 has been kicking my butt the last couple of years. And so I basically said in September of last year, something's got to change. I can't trade this way with this much money. I can't trade fast enough, which has been half the problem. Okay, so the reality is I switched strategies and said, okay, the S&P 500 companies, very diversified, usually averages 10 to 12% a year. Average, keyword average. So that might mean you're up 21 year, down 10 the next. But overall, it's an efficient index. We have to be real about that. I'm not just sitting in the index, I'm getting in and out at key levels, okay? So if we know the index is efficient, if I can stay anywhere near there and ideally beat it, that's my job, we're gonna be fine. So that's the thought process behind it. And I've been testing this for years and finally felt comfortable doing it. And again, this is not easy to do. This is doing it across basically 440 accounts. So you have to have multiple trades ready. It's tricky. It's not as simple as just trading one account, okay? So the reality is, have we done what we are meant to do? What has the strategy worked since we have implemented it? The answer is yes. Basically beating the index by 5.52% in trading the index itself. So a few rules that I implement, and I'll just tell you this. Again, this is for informational purposes only. First of all, this is for clients mainly, so they understand what I'm doing and the strategies involved, okay? So every day I go into the market with basically thinking, okay, what are the key levels and how does the market react to each level? As you probably assume today, when we started out red, most think that is a horrible thing. In reality, starting out red psychologically does something to the market that usually it continues to get bought. And so the theme of 2022 this year has been test the lows, test the lows. Today's the low, last night's low, test the overnight low. The low was 42.73 right here. We tested that very early, which was a good thing. So we went red very, very early, which is what I've been saying on Twitter, on Facebook. We need an ugly scare early. We need to test the early low, which we did. I added at 43.20, so pretty early in here, 50%, about 51%, okay? And I was considering adding, it got a little bit stretched for me. So the good news is this. So every day I go in, know the levels, and see how the market responds. We responded very, very well at 43.20, so I bought it. You don't have to have a bias thinking up or down. You just see if it holds. Like I made several trades this week, and it was tricky. Understand this, and I'm sure you saw it in the market. You're going to look at this and assume that this was not volatile. The reality is, guys, these candles are 4% swings. So if you have $1 million account, boom, $40,000 swinging in a day. Not fun, but did we manage it well? Yes, we beat the S&P 500. Could I have done better at times? Yes, no doubt about it. But we're still doing what we need to, and we protected. We, in reality, got out at 45.95 and did some trading within here. So the up down, this drives people absolutely bonkers. The reality is we've been going sideways for multiple days. This to me reminds me of this. So this is this candle right here. We may have one more day to test lower. And that's where I'm like 51% good. We had a squeeze into the close. I mean, guys, we basically moved almost 2% in an hour and a half. Okay? That's the kind of market we're in. So got to be real about that. Okay, so want to be real objective and honest about where we stand. We're 51% invested. It would not surprise me to see continuation. We tested right at the 200-day moving average. For many institutions, below here is an immediate sell. For me, the first close below the 50-day moving average, way up here, was the 45.95. That was the fastest I could get out because this looked like we were rebounding. The next day, boom, out. Okay, so following rules, I understand very, very clearly. Some of you are like, hey, we have not done well. No doubt about it. I'm not trying to hide it. I'm very frustrated as well. But the reality is I had to take it on the chin, be real and say that the strategy that I was using just was not sustainable. You would go in periods of making 20% in a month, and which is great, but you could lose a lot. And all the moves I made a lot of sense, but we got absolutely hammered in March of 2021, and therefore I was like, this can't happen. So under the hood, you have to understand, and I know I've been saying this, under the hood, you have names, growth names that have horrible financials. Let's start with that I'm no longer participating in, that are down 60 to 80% still. Okay? Once we saw the good names like Facebook, Apple, Amazon, not even Amazon, to be honest with you, Facebook, Apple, Google, the Microsofts of the world, once they have been holding the market up for a long time. And once those names tanked, which we all knew was inevitable at some point, it brings the entire market down fast. The good news is this. I know it scares you, and I know the news scares the crap out of all of you. But the reality is this, we are getting corrections within a month. Even in 2020, March 2020, that was regained. A 35 to 38% loss was regained in 2 months. So the worst thing you could do in that period is panic. I may not trade perfect at times, no doubt about it. I need to improve. But this on dips has not been a problem for us. It has been getting back in and feeling confident in those trades. Every dip we've seen, I've cut in half, which is the same story this time. Okay? So that's where we've been very strong. Where I need to get better is once I see strength, today was day one. Second day, if we get continuation, I add hard. So today was the first day. What I wanted to see and what I've been saying is a close above the 5-day moving average. This was the first day we've had that. Since all the way up here, the first close above the 5-day moving average. That is good. We're testing the next key level, which is the 200-day moving average at 44.35. This is a nice squeeze and a huge candle. It may need to rest a little bit, which is why I have cash available, tons of cash available to add, even make a few mistakes in there, sell if I need to, and get back in. So we're in a really good spot here. To beat the market through this crap is not easy. That's not a pat on my back. I'm just saying we actually managed this well. Could we have done better at times? Yes. I wish I would have added more today. This trade was ready at 43.50 to add it again on the downswing. It was a scare right at 12.35, which is normal. So just wanted to keep you posted with the mindset. Number one, the S&P 500 is efficient. It averages 10 to 12, probably truthfully a little bit more based on the last 10 years, but it averages a great return. It's hard to beat. And if I stay close to that benchmark, there's going to be times where I'm not going to be ahead of the benchmark. That's just reality. We were close to going negative a couple weeks ago, but I fortunately followed rules and sold below the 50, closed below the 50-day moving average, is blue line. So in short, the theory is this: we know something that does well long term, period. So don't panic too much because we're in a very diversified area. What causes the S&P 500 to really tank is when you get the 5 leading stocks that make 25% of the index, because they're so big, tank. So once they tanked, I'm said out. Just wait till they recover. And today was the first day, largely because Apple had a killer quarter. Fantastic. So let's see if we can get some continuation here. This would be good. I'm hoping it's something like this. Very well could see a test right back down there. So be open-minded. Or it could be this. I mean, 2 times. Look at this. Gap up. Gap up. Very similar charts. We retested and it's going to drive everybody nuts. But I will continue to watch key levels. I think we could have some nice strength. And honestly, the Monday before the end of the month, which would be this coming Monday, is one of the strongest days of the year historically. So good odds ahead. If we miss some of the gains on Monday, it's not wise to chase it because this very well could happen. This very well could happen. So you got to keep your mind even keeled and trade key levels. I'm not going to get them all right. It's difficult when you get a swing overnight of 2-3%. There's nothing you can do about it. I am not day trading. I want to make that very clear. I am taking good risk reward during the day. If we have a strong market, which we're not in yet, we're getting close, I feel more comfortable holding overnight. I would not have felt very comfortable today holding 100% overnight. I feel comfortable holding about 51% because what happens? Like China was down 2% today. So we have some work to do, but this is a very, very good step in the right directions. And I feel based on the risk reward that 51% is the right mix. Yes, I wish I would have added. The trade was right there. But the reality is we got a great entry early today. And I'm going to continue to trade key levels because the system is working. I understand many of you are like, hey, we haven't really done very well over the last 2 years. 100% accurate. I had to take that on the chin, say this is not possible with keeping track of 40, 30 names and trading each one individually. That you'll lose your mind. It's just not possible with the way I have to trade. That's the reality. I had to be upfront about that. So in September, I made a huge decision of something that I've been testing for years, and it's working. So again, if we know the benchmark is doing well and we outpace it by trading the index itself, that's good. We're doing what we want to, and my job is to try to create alpha for you. I don't want to just be the buy and hold, which would be fine long term. Nothing against other advisors that do that. But I feel like for me to create alpha for you, I have to try to beat the S&P 500 and try to prevent dips at key levels. That is my goal. And I'm not going to do it perfect every time. That's the reality. But to create true value, that is my proposition to my clients. I'm watching every second. I can promise you many other advisors don't even manage the account. It's just buy and hold, don't touch it. Which at the bottom, way down here, I understand that. But when you start to see this at close, to me, that's rule 101. But to each their own, no diss against anybody else. They've outperformed me the last couple years. And I think this will be a nice turnaround year. So just being real upfront and honest about the mistakes that I've made, the changes that we've made to combat poor decisions. And truthfully, the system even though it's very complicated, allows me to focus on one thing to try to master. I'm looking at a million things on the screens, but bottom line, did X key level hold? If no, out. If above key level and there's strength at the time, I've got to add, even if it means I have to chase. So it helps to know what the benchmark is doing, and it helps to know the key levels, which I've studied for a long, long time and follow a lot of different people to make sure I'm on track. So thanks for your trust. Kind of a different video, very simple, just showing you charts, and it's not perfect out there in the world, but again, usually when you get a bad headline and the market turns around, which the Ukraine and Russia thing, basically saying this is going to go to war, that the fact that the market rallied on that, it basically, in my mind, often means all the bad news is cooked in for a bit. Okay, so I think we could get a really nice rally, potentially up to 450 eventually. It might take some time, but not every day is going to be positive. But when there's strength, which again, trending above a 5-day moving average, and the example is this orange line. Look how well this trended when it stayed above the 5-day moving average. So we just got above the 5-day. And also, in the other end, bad things happen when you stay below the 5-day moving average. You stay out of trouble when this happens. And so I was out right around here. I could not help this. This happened overnight. Thought we were going to get above here. That Friday, the Tuesday after the holiday, tank. Not fun. But overall, you can see these trends, these lines, they really do help with discipline. So hope this helps. Hope this gives you some insight of what I'm doing, how the plan is working, and how I am taking risks when there is strength. I do not want to take a lot of risk when this is happening. Okay? I need to take shots in here, which I did. I traded about 5 times this week. And we were actually going in today about flat when the market was down about 2%. So the market caught up to us a little bit, but we were in a really good spot to be able to add once there was strength, and we finally did. So feel in a really good position here. And I do think we're going to get a turnaround very soon. This very well could happen. Boom, where we go up, test lower, but I think we can have a nice couple of days here. And seasonality does usually show that. So we're going to trade price, see what happens. I think we need to, one thing that I constantly watch, and I'm going to bring this down, is, one second. One thing that I always watch is, are we oversold short term? And the answer is yes, which is why I did not add at the end. Doesn't mean we can't go higher, but this is a nice break here. This higher, if I drew a trend line, that's a really good break. One of the most positive probability trades that I've ever witnessed. But again, this very well could test lower. So we feel like we're in a really good spot right now. We really appreciate your trust. Just wanted to give you an objective, realistic perspective. I know I need to improve. It drives me nuts because I'm watching all the time. And it certainly has not been a lack of attempting, but sometimes in a career, you have to be real and say, this strategy cannot work for managing 440 accounts. And watching 40 stocks at the same time saying this one gotta go, it's just not. It was making me lose my mind, and I wouldn't advise anybody to do that unless they're buying and holding, which most of those names are down 60 to 80%. So understand that March 2021, if you were with me at that point, was one of the most brutal times I've ever seen, where the market was being held up fine, like, hey, nothing's going on here. But then under the hood, high multiple stocks got killed and we got hit about 16%, while the market rebounded and was doing fine. It's not uncommon during times like that for in the cycle for you get a rotation like that. But I actually bought those names when they were down 25%, thinking, hey, these are the leaders in 2020. This is a good entry. I had to get out. I got out about 16% later, and it happened in 3 days. Not fun. Not fun at all. But we learned from that. We're moving on. We appreciate your trust. Again, this is a hard conversation because I lost a ton of money personally, and I take managing your money more serious than my own money personally. Like, I am an achiever. It is hard to be wrong like that. So want to be real, honest, objective, and say, we're learning from this. We are improving. Your statement this month is going to be ugly. Like, the market went down the largest it has ever gone down. It hasn't gone down that much since 2020. We did not see a 10% correction in 2021. So we have already surpassed that. 2022 is going to be a tough year, as I already have already told you, with interest rate hikes, so on and so forth. But there's going to be opportunity, and I think how we are positioned in the strategy, this is really going to help. No more babbling. Have a great weekend. Overall, good close of the week. Exactly what we wanted to see. So hang in there. We'll be okay. Again, understand I had several clients this week call me saying, I want to take everything out of my accounts, and we were in cash. So understand that there are times where we can keep everything in the account, but just go to cash. But a lot of times when there's blood in the streets, which we were getting there, it's the time to buy. Okay? So keep all that in mind. Honestly, the news does nothing good for you. It'll put you in an anxiety state. I know the news, but we'll trade price because, like today, the headline was horrendous. What happened? The market rallied. That you have to understand the psychology there. Okay? So thanks, guys. Appreciate your trust. Have a great weekend. Get outside in the snow. We have about 4 or 5 inches here. Going sledding on my hill. See you guys.